A very good morning, everyone. Welcome to Admiral Markets, our live trading room. We're going to be taking a look at the markets in just a second. I think there are some interesting setups going on the Aussie and the dollar CAD I was looking at this morning. We'll talk about that in more detail later on. But before, of course, we start, we have to explain the risk involved with the trading global financial markets. That is considered high risk. It may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar video is for educational purposes only. This is a live webinar, but it is taped too, so that's why I say video. Welcome once again to our live trading room hosted by Admiral Markets. My name is Chris. We're going to take a look at swing trading today and on Thursday intraday trading. So if you're more of an intraday trader, I hope you stay around because I think we have some interesting stuff to look at. But we do focus on that on Thursday. We also had an educational webinar yesterday. Hope you enjoyed that with Tarantula. And we have again one Thursday. We talk about characteristics of a currency pair. So I think that will be interesting for you. By the way, I will show you where you can register quickly. If you want to register yourself for tomorrow's live trading session or Thursday, where we take a look at today's trading, go to education, admiralmarkets.com, education, and then go to webinars. And at webinars, you can see the upcoming sessions and you can sign up, okay? So everyone knows about that. That's good. So today we're going to take a look at breakouts, pullbacks, and continuation trades, primarily on the 1 hour and 4 hour chart, maybe on a 15. We'll be defining the trend, looking for divergence, Fibonacci levels, support and resistance, and we'll be trying to establish if there is a trend. We're looking for pullbacks, checking filters, and then deciding how to enter, or how I will enter. And with that said, we're going to take a look at the Forex calendar in just a second, and then our live trading. But before we do that, I'm going to check if Michael here is here today.
Good morning, gentlemen. Good morning, ladies and gentlemen. Thank you very much for this wonderful introduction, Chris. I'm hope it's going to be a great trading session today. But before we do that, before we concentrate on the trading session, I will now switch to my screen and give you a small presentation. Just 1 second. There we are. Today I wanted to speak to you about something that is really important to all of us. And at the end of the presentation, just today, just for September, I'm going to give you a nice little surprise. But before that, my name is Mikhail Onokhov. Here's my email address, my phone number, my Skype. You can always reach me via any of those media mediums, or you can always Google my name and search me Admiral on LinkedIn. I'll be very happy to accept your invitation to join. Today I wanted to speak to you about decisions. Decisions. Your success in the financial market is always determined by the decisions that you make. However, different financial activities require you to make a different amount of decisions. In some circumstances, all you have to decide is which trust fund will manage your investment. Some decide to construct a portfolio themselves and are faced with choosing, say, 20 different types of equities to suit their long-term investment objectives. Some decide to actively manage their portfolio and adjust their investment from time to time to remain either beta neutral or heavily beta exposed. Forex market, of course, is a Cadillac of decisions. You are faced with a huge amount of decisions every single hour, minute, and second you spend logged into a MetaTrader. What currency pair to choose, what limits to set if any, to close a position with a small profit or loss, or leave it open expecting the market to make you a favor. There is no other financial activity that would put your decision-making skills to a test quite as often as Forex will. In fact, you're faced with an important decision as soon as you decide to register. There you are, typing in your name, your email, when you're kindly asked to decide which account type you want to open. Just try to remember the first time you've ever been to Starbucks. You come in for a coffee that is pretty much all you wanted. Suddenly, you are faced with a tough decision to choose between hazelnut cappuccinos, vanilla lattes, and chocolate frappuccinos. Each of them comes in 3 different sizes too. And you cannot just get a medium or a small coffee. It has to be a venti or tall or something else. The first time I was in Starbucks, my embarrassment lasted for the whole 15 minutes. There were too many choices. Later on I went to Subway for a sandwich, just a sandwich. Needless to say, I was late for work for about an hour a day. Some brokers, they do the same thing, and after you've typed in your home address, you must then choose between 14 different account types. We at Admiral Markets always have your best interest in mind. Therefore, we decided to keep it simple, short, and sweet. You get to choose between a standard account and a pro account. Those are the only choices that are available to you, the most important 2 choices. And the choice is not a difficult, but it's a very important choice. Therefore, I decided to take this time and explain the main difference between Admiral Standard and Admiral Pro today. First of all, you must consider your financial objectives. If you are new to Forex and would like to see if you know what it takes to make it a Forex trader, think no further. Standard account is the one for you. The minimum deposit starts at just $10 and all your needs will be accommodated. Admiral Standard gives you an opportunity to trade currency pairs. 30 pairs will be available. You will have an opportunity to trade commodities, indices, and shares. Our spread on major pairs starts at 1 pip and leverage is up to 1 to 500. And this leverage will be granted to you, meaning that no matter how small your deposit is, you will be able to enter in large trades on Forex market with the sky being the limit to your potential profits. A pro account is a bit different. As the name suggests, it is designed for Forex pros. If you're keen to describe yourself as a Forex professional, this might be the account for you. Needless to say, you need at least $1,000 to open such an account, but it should not be a problem for a Forex pro, nor should it. The first thing you'll notice, the pricing is different. Admiral Pro pricing is reflected by fractional pips, and the spread starts from 0.1 pip. You'll have 27 pairs to trade with, no CFD. So think about those 2 accounts like this. This is your Admiral Standard, a beautiful Porsche 911 car. You can buy one in the store. You can drive on a road really fast in it. It's really comfortable, really good engineering. This is Admiral Pro. Admiral Pro account is the same car, but a sports version of it. We've taken all the unnecessary, all the other things from this car to make it go faster. And then we also charge more for it. So this is your difference. You can take your standard account to trade DAX indexes, and when you want to trade on a currency pairs, you can switch back to your Pro account. You can keep 2 accounts together. They both are available for you. This is the good news. Neither of those choices will result in any financial loss, and they're not even final. Once you have your account opened, you can open up to 10 different trading accounts. So use your standard account to be on a DAX or FTSE or Dow Jones, and then switch to your Pro to long yen versus dollar. The choice is always yours. What is important though, we made it our responsibility to at least one of many choices as easy as possible for you here. And now, just as I promised you, a small surprise. This September, we'll be doing something very special. It's called Webinar Special. And you can receive a bonus on your next deposit, which is over $1,000. For details, just reach me. Here's my email, my phone number, my Skype. I would really appreciate if it was either email or Skype. I'm really always on those 2 things. Ask me about it, and I'll give you full details. We're not going to advertise it anywhere else. So it's just for the people who attend this webinar. It's especially just for you. Let me know if you're interested. I'm sure hope you will be. I will now be passing the microphone over to Chris. It's been Mikhail Onachov, the Client Relationship Manager at Admiral Markets. Thank you very much for your attention, and good luck learning today. Bye-bye.
Thank you so much, Mikhail. That's great. Great news there for everyone. And I'm sure that all of you will be talking to Mikhail soon, because I'm sure that's going to be a very interesting offer that Michael has in store here, so make sure to do that. With regard to our trading, Tuesday, September the 10th, we have basically a very light week ahead of us, and especially today, nothing really major blocking us. We have some lighter and medium impact news. Otherwise, the rest of the day, I think the rest of the week only on the USD on Thursday, the jobless claims. So very light compared to last week with all those interest rates and NFP. So we're going to take a look at the charts right now. Before I do that, once again, just take a look at admiralmarkets.com and go to Education Webinars to sign up for any other webinars you would like to see. And I'll move over to our charts right now. Well, I was basically looking at the Aussie and the dollar Swiss, dollar CAD. And let's see, what else did I have on my list? Yeah, those are the three most interesting, I think, for me for today. I actually have a pending order already on the dollar CAD, and we can take a look at that right now. And the Aussie, I think, are my prime interest. The dollar CAD is back at the bottom of a trend channel. All right. So if you look at the day chart, let me start with the day chart. You can see the uptrend channel that has been sustainable for quite a while and has acted in a very nice angle. Price nicely respecting the bottoms and tops, and it's just a good trend channel. Recently, we couldn't break the 106 top, and in fact, we respected this bigger trend line maybe here. I think it's a weekly trend line. If you connect these tops, we couldn't break that. So we were looking at the longs here at the bottom when we hooked back, and now we're back again at the bottom. So again, I'm interested in that if we were to break bounce yet again. Oh, excuse me for that. I want to open my drawing tool, so sorry for that. So a bounce is interesting, and that's what I'm trying to trade. So if we then zoom back into the 4-hour chart, you can see where if you would fib this up move here, maybe we can draw this fib a bit lower. We're right at the 786 fib. All right. Now then I zoomed into the 1-hour chart, and you can see that the move down was pretty impulsive, pretty fast. And, it's just a pretty steep retracement. So at one point or another, this retracement is going to bounce back for some rally. This is not going to continue forever, especially if you consider that it is a bigger daily uptrend, and we're right at the bottom of that trend channel. So what I'm doing here is, I got my drawing tool working finally. What I'm doing here is basically a bounce trade off of the trend channel for some upside. So I took an entry, the first moment that I consider a bounce, could be here, but that would be an early entry. That's picking the level. If you wait for a break of the 1-hour tops, then you already have a confirmation of higher highs and higher lows. So I'm taking a confirmation trade here off a bounce. So it's a bounce trade with a confirmation entry in an uptrend. All right, so I think it's a pretty good combination. If you look at all these factors, as you know, I rather have not bounce but breakout trades, and breakouts with the trend. Someone is saying that they can't see my charts. Moga, I think it's on your end, because if I look at the audience view, I see a chart. Does anyone else have problems with chart viewing? That would be perfect. And then we can move on with this trade setup. Is anyone there? Because I still didn't get any confirmation. Do you hear me, first of all, and do you see the chart? but the idea is definitely valid. Problem. Okay. Interruption, folks. Is it better by any chance? It is? Oh, that's good. Well, I have a new headset, so I will use it soon. It's just that the headset that I bought during the weekend is not working yet. I have to make it work somehow. But it should be a good one. It was expensive, so let's hope that one would be better. So I'm still using the old one, so bear with me. Should be usable by tomorrow there. So yeah, that definitely could make sense to wait for a retrace, for example. Nothing wrong with that. Then you would be waiting for taking a bounce and waiting more of a double confirmation or a pullback, in fact, isn't it? Instead of the confirmation, it'll be a bounce, pullback with the trend trade. Or you can even wait. There's so many entry possibilities. You can, instead of taking the pullback, you can wait for the next break, right? That would be the confirmation in a way. After break, pullback, continuation on a lower time frame. So if we zoom into the 5-minute chart, this is a pretty hefty move on the 5-minute world. So that's more or less the B. This would be the P part and the C. So definitely there's always the potential need to trade the P or C. In this case, I chose the B because, I guess because I wanted to have the entry order ready. If we start looking at other charts, I might miss it. Plus, for me, the fact that we're making a potential higher high here would be enough to risk it. I have a target here at 105.40. That's the top of this resistance line. That's a 6-to-1 trade. So, as you can see, I calculated already beforehand. So I think that's well worth it. We only have to be right 1 out of 5 times to make money here, right? And I think the statistical odds are a bit higher. I'm not sure how much, but I would say at least 1 out of 3. So this setup should be a money-making setup, I think. So that was my idea here for a swing trade on the dollar CAD. The target is 160 pips, as I said, and the stop loss is 27. So I have 103, just a few pips below this low, and the entry just a few pips above this fractal high. Is it a risky trade? Yeah, of course, because there is a lot of momentum here. So that's always risky. That's why I like to have momentum like this and wait for the breakout, because that is always the safest trading, because you have momentum on your side, and especially if you're then in an uptrend, you're actually trading an uptrend, up in an uptrend after an impulse, slow downside correction, and then upside. Right? So that's always the safest trading. This is a bit more risky, but considering the reward to risk, I think that should compensate it enough. There's always that risk, indeed, that we go lower and hit this trend line, for example. There's always that risk. All right, but because we broke these resistances here, that's what I've kind of considered that if we break that level, we're making higher highs and then higher lows. So once we break that resistance spot on the lower time frame, my reasoning is that we will maybe make, for example, a inverse head and shoulders here on the 50-minute chart. Any move down will find support. At least that's the reasoning of the trade. When we do retrace here for more buying, for example. If that's true, we never know. We, of course, never ever know. That's just the trade idea. So we'll have to see. So last time I did retrace the trend line, indeed, quite many times. That's always when you have, or not always, but often when you have a strong impulse like that, you do have that risk indeed. You do have that risk. But, then again, sometimes it does move away pretty fast. Here we had a pretty strong hook back, took out the low by a few pips and then moved up. But here it went pretty fast. Let's see. Oh, the chart doesn't allow me to pull back. 1 second. Here, for example, we also got a inverse head and shoulders here, and eventually, we had a smaller hook back here, but then we bounced up pretty fast. Here we moved up pretty fast. So you will not always, the currencies will never do always the same pattern. There's always be small variations. They're like, unique identities. Everyone has, as I said in the past, has fingerprints. All humans have fingerprints, but the fingerprints will always be different between us. So in a way, the charts are two. And yeah, it doesn't have to be slow or 50 retests like it did here, for example. But the probability of that is higher than here, than if you compare it to a strong impulse in an uptrend and you have a weak correction like a bull flag, and then you continue. That indeed, a break of that trend line is always a higher probability that you'll move faster in the direction of the trend than in our current example. That's for sure. These statistics are a lot higher than the example we're looking at right now. That's for sure. That's no doubt about it. That's why I'm always so focused on this, because this is one of the safest setups you have in the Forex market, if you can consider anything safe. But you know what I mean, like relatively. We are getting in the meantime a pretty pretty deep pullback. In fact, oh, I'm not in the trade as yet. Okay, so I thought I was, but it didn't take me in here. So that's good. So I'm basically waiting now for the continuation, in fact. I didn't take the B. Let's see if we get the bounce. If we do, then I'll be in. If not, then I'll revisit this. Let's take a look at the Aussie, and then I'll answer some of your questions there. The Aussie is moving up, has broken out of this black trend line here. I left it on so you can see that we broke out of that. I'll take it off. I have these green lines I left on. I'll still take them off. I'll leave one of them. Okay. So basically, we're still, still in a downtrend, but this up move is quite impulsive, right? And as of recently, probably more of a triangle or a range. Prior to that, it was obvious downtrend, but recent price action going quite sideways. In any case, we definitely have a resistance zone anywhere around 930, 93.10, 93.40. Definitely heavy daily resistance. And prices approaching there very closely. It's at 92.90. It reached earlier this morning. And as I said, we made a very impulsive move within that downtrend. In fact, we only bounced off to 236, and now we're at 272. So in my opinion, even if this were to go higher, the likelihood of a deeper retracement, maybe back to the 382 or the 50 fib, which could find support for one more upside, maybe back up to the 618 fib. Oh. The 618 target. I mean, we're right at the minus 272 target at the moment. So there is a likelihood to see some retracement, maybe down here, maybe not even that deep, maybe here for that upside, or we get a total retracement. right? Continuation, I should say. In either case, downside pressure, I think, is definitely a decent likelihood on the Aussie. Now, the Aussie is a bit tricky because it likes to go up because of the interest rate, of course. In the past, especially the last 4 months, it weakened a lot. But the Aussie always, even despite the downtrend, you can see that anytime it has a chance to go up, it will kind of gladly use that opportunity. So, it was good trading to the downside because it was such a massive downtrend. Prior to that, it was always a bit risky with the Aussie, especially when the interest rate was higher. In any case, we got a good 4-hour confirmation candle right here as well, right? So if you were a level trader, you could have taken the bounce off the 272 target. If you're waiting for confirmation, then this would be somewhat of a confirmation here with that 4-hour rejection wick. If you're looking for momentum, then you're probably looking for a break of this trend line, for example. So those are the 3 entry methodologies you can think of how to tackle this currency. It's a pretty neat trend line. So a break of that could indicate that we are moving lower. We have engulfing 1-hour twins. So those are things that support that thinking. Okay. Now, mind you, it really depends how you look at it. Someone's saying, is there a W formation? There is. Maybe I think you're talking about this. Could be. This left one and the right one are not that equal to each other. So we have to realize that there are a lot of things a trader can see. This is definitely nothing wrong with it. It's just that at the moment, price is really at a resistance, and even if that reversal pattern would pan out, there's always that likelihood of another hook back before we would bounce up maybe to higher levels and then still fall. Who knows, right? If that's what you mean, Fuad. So, Fuad, sorry. So, that's always possible. But there is, when we do move down, a potential bouncing area, and then we move up again, then we'll have to see if there's weakness, or do we continue and move up higher, indicated by the green lines. If this inverse head and shoulders would play out, we'll move higher probably. If it's just a triangle, maybe a triangle formation or a pause within the downtrend, we'll probably continue lower. So I do think that the upside correction has a bit more likelihood than immediate downside continuation. But this is again, a higher time frame. We'd have to look at the weekly, monthly to establish how far and long this can go down. I'm not sure how many people are interested really in that. For the moment, I think the most important is just for current, let's say current trading, what we're looking at, what we can trade now. I think the most important is that we have a rejection off a target, and there is a likelihood to retrace further down before there's probably a high likelihood of moving up again to move higher, to correct higher. Let me say it this way. And then, what happens after that is really dependent. We have to analyze the higher time frames. So now there are different ways of tackling that 4-hour candle. If you do like that candle, first of all. If you don't, no problem at all. Maybe you consider this an uptrend and you don't want to go against that trend. That makes sense. I mean, it's always wise to stick to a trend. So it really depends what time frame you're looking at as well. If I look at the daily, I still see some downside momentum in the past, plus we're close to a resistance. So that for me would be enough, but if you're a bit leery of that, no problem. And there are a few ways, in fact. You can either take the retracement of the candle, right? You can take the break of the low of the candle, or you could even wait for the break and hook back, or break, hook back, and continuation. So, there are always different entry methodologies, that are possible. The one that I was thinking of today was a break of this 4-hour low with the stop loss above here and targeting the 3-2 or the 50. So that was my thoughts there. We can zoom into the 50-minute chart. You can see I was actually looking at this live here, and I was thinking about taking a short right in there, but maybe we should have done it. Wanted to wait to take it with you, in fact, but we got a quite sizable move already within that hour. That's okay though. Still didn't move that much relatively. So this was already kind of like a shooting star here, wasn't it? And signaled some weakness there. So that's my idea. I'm going to punch it in now. Now I did spread the risk over the dollar CAD and odd. If you think that they're too similar, then taking one is also nothing wrong with that, of course. Let's take a look at the spread on the odd dollar here for the stop loss, to calculate the stop loss, I mean. And it's less than a pip, so that's very little. So now I'll go with a tad less risk on this one than compared to the CAD, just because that I find this a bit more riskier than the CAD personally. So I'm going to aim for the 382 fib here. 90.80. 90.82. So the target is 160 and the stop loss is 50, 49, 48. 48. So that's just like 3-1, just a bit more than 3-1. Let's see, 3.05 probably. So let's say 3-1 to make it easy. Oh, clicked the wrong order type there. I'm a seller, not a buyer. All right, that should do. And both trades have green lights, which means that we're relatively close to that trade, of course, within 10 pips. It's a shame I didn't take it right in here, in fact. Would have been up already 30 pips, but oh well. Doesn't matter. That's a pretty strong 4-hour candle, I think. So let's see if we get indeed a follow through with momentum to the downside to target at 382. You can see this is the daily candle at the moment. One other way to do it is to plan on a retrace, of course, as well. if we look at this daily candle, then maybe we'll have some ups and downs before we move down more, right? We can retrace this candle, for example. So maybe I'll scale in a position there. Let's take a look at that. As I said, there are a couple of ways, right? We can wait for the pullback here. We can wait for the break here. We can wait for the enter on the break, or we can wait for the break and wait for the and then enter on the pullback, or wait for break, pullback, and take it on the continuation. So they're really different ways, and you know, there you could even think of multiple ones, right? So if you like to trade. Let me zoom into the 5-minute world. Looks like we'll maybe get a bounce here. If you look at the 5-minute world, we've had 2, 4, 5th candle not breaking the bottom. So let's see in the next 2 candles at the halfway the hour at 8:30 my time, London time, we'll know if this may be, we'll get a bit of a retrace. Because for the 5-minute world, I must say that a 42 pip drop like that is quite a lot in one go. So in that regard, there is a likelihood of a retrace before we make a continuation. In that regard, we can even fib this 4-hour candle, because this 5-minute world, of course, this downside on the 5-minute world is basically just that 4-hour candle we were looking at, right? This one here. Although it's not visible because of the fib. 1 second. So maybe a retrace to the 50 or 618 would be good. That would, substantially reduce that stop loss size. You can see that, at this moment, the 50-minute world, the 5-minute world, we're at the long-term moving average. And the 50-minute world, we're back at the band. Right? And that, if you translate that to the 1-hour chart, we're not even at the band yet. We're about halfway. Band will still be support. We'll probably get a bit of a bounce there and then fall lower, most likely. Now, you never know. The band can also provide support for that upside. So that's always risky when 1-hour price action is above the band, because it could provide that guidance. Then again, if you look at the fact that we do have divergence here between the tops and the 1-hour chart, oh, 1 second. I think I just deleted my my chart. Ah, there it is. Sorry, folks, I'm having some technical issues here. Alrighty, it's back. Alrighty, so I lost my focus here. So we have divergence, I was saying. So when we have divergence, there's always a chance to go back to, for example, long-term moving average here and make that fall to that level, for example. And you can see that price is pretty far from the 4-hour band as well. So there is space to move to that. So the target for me is 90.83. Once again, the take profit is 90.83. But what I will do is, because you can see that there is some support around this level here. There's also the broken trend line. There's the 4-hour band, the 1-hour long-term moving average, some support right in here. So probably if I would be up, if it gets to around 191.50, 91.40, because that's the, let's say, that's the 4-hour support level approximately here, then I will move it to break even, most likely, or at least trail stop it using the 1-hour fractals. Oh, the keyboard is not on my side today. So that's something I'll probably do with the trade management side. One thing I can do is that if you're curious what I think of the trade management, and if you like this trade and you take the trade and you're curious what I would want to do with the trade here, you can always Twitter me, for example. I think my Twitter name is, let me check it out. Oh, I have to log in again. Okay, log me out there. But it should be my name, Chris Svorcik, and then you can take a look at that or ask me through Twitter. Okay? Anyhow, that's the idea of the trade. So I would say I'm still interested in seeing if it can make a hook back. So I would like to take a look at it continuously in our session to see if we can make that pullback and maybe take an early entry here as a pullback of the 4-hour candle or retracement of the 4-hour, square up of the 4-hour candle. Many terms one can use for that, for more downside. Now, instead of taking the exact fib, right, here again you can approach it with multiple ways. Right? Instead of, you could take it at the 618, you could put a pending order at the 618.50, for example, or you could wait for the move up, see if there's a price action response to the fib, and wait and take it upon the price action bounce off the fibs. Or if there's a trend line here, wait for the momentum break. As always, you have various entry methods even towards a situation like this. You know, within, basically this is the pullback, right? But within the pullback, you then again have 3 ways of trading it if you want to take the pullback. Or would you rather wait not for the pullback, but for the continuation, basically, right? So let's keep an eye on it. Anyhow, I'll just quickly answer those questions, and then we'll move on. First of all, anyone else want to take a look at it? These are my 2 favorites. I want to take a look at the dollar Swiss. So my questions to you: what do you think of these 2 ideas, and what do you see that you would want to trade? Because these I already told you my favorites today. We'll take a look at the Swissy as well. And in the meantime, while you're answering my questions, I'm going to answer your questions. The moving averages are the 150 long EMA close, and this long-term moving average, and the 3 shorter 2 moving averages are 34 EMAs. All 3 of them. One is the close, one is the high, and one is the low. 34 EMAs. Let's take a look at, okay, one person left that wanted to ask a question. I was a bit too late with that. How correlated do I think this is with the Swissy? I think, Chris, you were talking about the dollar CAD probably at the time. Yes, probably you were. So, well, the dollar Swissy, dollar CAD, I personally don't look that much at correlations between pairs because each of these crosses move as well. So, the New Zealand dollar should, in a way, behave the same as the Aussie dollar if there's dollar strength or dollar weakness. Then again, there are often enough substantial differences. For example, at one particular time, the New Zealand dollar could move up a lot more than the Aussie, just because the odd New Zealand is moving down, and it has been moving down, of course. So it's a real life example we've encountered recently, when any downside against the or strength of the dollar was more visible with the Aussie than the New Zealand dollar, just because the odd New Zealand dropped 1,500 pips. So the same would be true. I mean, the Swiss CAD is also moving. So yes, on paper, there's always correlation there. But if you're swing trading and you're looking at the market from against a lot of currencies, you'll quickly see that the crosses also move a lot, just like the euro odd, for example. I mean, it actually moves more than the majors nowadays. It's tremendous movement. So it all depends what type of trader you want to be. If you rather focus, for example, only on trading the euro dollar, then you just have to be more adjustable in how you trade every day, because the euro dollar, for example, in the month of August, it didn't move anywhere. It didn't go anywhere. It really just, the monthly candle was 270 pips, which is a daily candle, maybe on the euro odd, for example. So, alrighty. Adrian says USD CAD he feels is safer. Yeah, I think so too, because it's close to support, but I agree. Yeah, we'll take a look at the euro pound as well. Yudi thinks they're overbought. I can see there that the logic makes sense to me. Fuad is asking why 34 EMA. Well, basically, the 34 EMA is a concept from a trader called Reggae Horner. If you know her, she's a trader, and she uses the 34 EMAs. But also, you might have realized probably is that the 34 is a Fibonacci sequence number. So that's probably why she chose 34. So let's take a look at the pound and euro, okay? I can see there's some interest there, so that makes sense. So let's see. The Aussie hasn't broken this low for 30 minutes, so I wouldn't be surprised to see a bounce here, but let's see. A small bounce, right? Because I'm looking for that downside. Anyhow, let's move over to the euro. The euro seems to have made 5 waves down, which in my opinion signals a good likelihood of more downside continuation, first of all. But also, if you just look at it from the daily perspective, you'll see that there is that space back to the bottom, for example, here. So I'm bearish on the euro dollar. And I would only become bullish either when price would approach the range, right? I mean, there could be a bouncing spot. Not that I'm bullish, but there could be a bouncing spot, let me say it this way. And I'm bullish if we break above this resistance, hook back, and then bounce to the upside. Then there could be a few hundred pips up to 137, and then maybe up to 140 and 142. So for the moment, until we do that, I am bearish, at least back down to the next support level. And I think that could be a good trade. Not sure if the 50 fib necessarily will be the turning spot for the downside. We could go higher to 618 and 786 even before making that fall, in my opinion. That's always possible with fibs. I think that's a decent likelihood that we'll make that fall. As you can see, we already hit the 50 fib with a shooting star in the 4-hour chart. That happened yesterday. We've gone sideways for 4 candles, haven't broken that top as yet. So looks bearish to me. But that ties in also, of course, with the odd and the dollar CAD, in the sense that there too, I'm looking for dollar strength, right? So the 50 fib shooting star at the 50 fib, and if you zoom into the 1-hour chart, we're actually breaking through this small 1-hour fractal here. So back to the 4-hour chart. So what could happen is we either fall directly here very quickly, or we do find a fall, but then still find support maybe for one more upside to 618 fib, and that 618 or the 786 are the spots for bigger downside. Both are equally valid. But in the long-term picture, I would expect downside, as I said, just a question from which fib. The daily divergence Kalen is talking about is definitely one of the factors too that are important to note. Absolutely. We have divergence between these daily tops. That's not nothing. That's very significant. Daily divergence, just like 4-hour divergence, those are very significant time frames. So that's a good comment there, Kalen. We'll take a look at the euro dollar on this view here, maybe quickly. There are a lot of charts here. I'm going to zoom in to some of these charts right now. Let's start with this one. And you can see that the momentum bars are now turned gray. That just means we're in a neutral territory as we speak on the daily chart. This is the daily. Let me take off this line. You can obviously see that price was in an uptrend here, many green candles, and we got the break, and we were in a downtrend. Now we're grayish at the moment, but from a technical point of view, even if these candles were to become green, I would view that as a retracement, just like, for example, this was a retracement. And at the moment, the gray band here giving a good indication of kind of the range we're in. It's about the halfway point of that range. So if we break those lines, probably move down. Let's take a look at the 4-hour chart. Here we already have green candles, but note that the price is below the green band. So despite the green candles, I would view that as retracement, as you know. Now for, if you want more confirmation to trade it to the downside, one way of doing that is waiting for this to turn as a, waiting for this to turn, for example, red, instead of taking the fib. Let's see how the 1-hour is also green. So there is some, definitely the momentum at the moment up. 50-minute world, red candles, because we're getting some downside push here. You see that that gray band is pretty interesting here on the 1-hour chart, because it was acting as support right around here, and then we broke through it. Then it acted as resistance, and maybe now, if we do make the downside, we can use it as support again to move up to the 618 fib, and then respect the 618, and then break to the downside. So that could happen. Let me take a look at the other charts here. Let's take a look at the green band here. That's a different band, mind you. They chart now showing that the candles are below that and using the moving averages as resistance, most likely. For our chart, we're above the band already. You see, that's one more reason that if we drop here, maybe it could be used as support, with a big emphasis on maybe, because it could drop right through it too and continue. It's not something I would be trading personally. As I said, I'm in a bearish mode, so all I'm looking for is downside potential, not upside potential, unless we really break out of here, right, in higher ground. Then, of course, I would look at it differently. 1-hour chart, yeah, obviously price above that green band already. So yeah, we're stuck in that mode that basically euro dollar is moving up, but I'm looking for downside confirmation. We can take a look at the Camarilla now. I know that's for intraday trading, but it doesn't matter. Let's take a look. We have an L3 at 132.20, an L4 at 131.90 or 88 to be precise, and L5 at 131.36. So there's 42 pips between L4 and L5, indicating that the euro dollar is gaining some momentum, because in August the Camarilla was on, there was only like 20 pips difference between the L4 and L5. You hear me? Testing. Alrighty, folks, do you hear me now? This is a new headset now. Does this sound like the same like the past, or is it like underwater? Underwater, okay. That's because the headset is not working. Yeah, you're probably hearing my my computer microphone, because I have a new headset, as I said, I bought during the weekend, but it's not really working as yet. That's the problem. I don't know why. So you're just hearing my computer microphone, which is very weak. Alright, folks. Well, I'll try to finish it without the microphone, and I'll do some testing today, and hopefully get the new headset like up to speed and working. Let's go back to the chart. Sorry for that inconvenience. Apparently the old headset broke down, I guess, because it just stopped working. And that's why I bought the new one, just in case that, because I always have two headsets, just in case one stops working. And then one stopped working, so I bought this one. And then this stopped again working, so two stopped working within a week, I think. But the new one is a very nice one, but not sure why it doesn't work yet, so I'll have to figure it out.
So I was saying that the H4 is a bit risky, but if because of the 618 fib, but if it would push through maybe after a retest, for example, an up, pullback, and continuation, that could still maybe make sense. But personally, I'm really more in the bearish mode here. But it doesn't mean that there couldn't be any small intraday longs in this area. But to me, this is heavy retracement area. That's why. For me, the short area here, from an intraday perspective, would make more sense. Let's see, the euro dollar here showing red levels. That's pretty bearish. The stochastics slightly moving, have turned and slightly moving to the downside. The same for the 15-minute world. 5-minute world is a bit oversold, as you can see, because we moved down. 4-minute world moved pips. I will move on to this movement. I that euro 68. Much the 60 and I'm down from here to back to the top of 157.50 and H4 is above 157.50. So 157.50 up to 158 is the H4 to H5. That makes sense because 157.49 I think is a major resistance, major top. So I would not go long right in front of that major resistance personally, right? That's a rule of mine. I think it should be a rule for every Forex trader not to go long in front of a resistance like that, nor short before a major support, unless you have maybe a second break, for example. So personally, I would be more interested in the intraday short here between L4 and L5. Anyhow, let's take a look at the pound dollar from a more longer term perspective, from a swing trader's perspective. And let's take a look at this day chart. You can see a major resistance at 147, 157.49, 157.50. That's the daily top right in here. Price couldn't break it here. Let's see if it can break here. It could. It is the second go. It's the second attempt. Still not that confident that it necessarily will. Not something I would want to trade. I'm going to say it this way, but it could. I'm more personally interested in either a break of the 157.50 and a hook back, continuation up to 160, or if we break the trend line, hook back, you're going to look for more continuation either on the hook back, pull back, or the break of the 150.40, 154.26 support. So those are the areas I'm looking for the pound dollar. Otherwise, a nice uptrend channel. Nothing wrong with that. And I would love to trade it, but not right here. Only if it break and pull back to that broken level, for example. So that's my view on the pound. Yeah, now it's more of a neutral territory indeed. Yeah. I mean, let me say it this way, the trend is up, but it's at a position that wouldn't want to trade it. Only if we break that resistance would I be interested in that continuation here. A clear break. Let's say a daily close, for example, above the 157.50. That would probably indicate a good control of the bulls above that level, and would look for a pullback and continuation. All right, let's take a look at the pound yen. Russian was asking about that. And then we'll take a look at the Swissy. Well, the Swissy is actually the opposite of the euro in a way, so maybe not much to look at. This is the daily. It's a bit crowded, the chart, but if you look at these tops, this was the recent high on the pound yen, and in fact, the pound yen is now breaking through that. So that's quite interesting. And in fact, it has moved up 700 pips in about 1.5 weeks, which is not bad. So yeah, it has moved a lot. The problem here was that it was quite stuck in this range for a long time. Didn't find it that interesting because of that, but eventually did break. It just took a lot, maybe more time than one can imagine, because this was quite a long, sizable period of price action, all the way from May. But it seems that the pound yen is breaking now to the upside. So what that means is, if we do break, we could maybe see the pound yen moving up and continuing, for example, up to this 272 target of the weekly chart at 167. If you look at it this way, it could be a 1, 2, 3, for example, wave 4, maybe not for wave 5. And in that regard, this would probably be a wave 4 triangle. All right. So let's see if how much we can push through, because we're at the top of this trend channel. So maybe there's not that much space. Maybe we'll make a retrace like this back to the bottom, and the next break would be lovely. All right, because that's a pull flag, and that would be a great break to the upside. Right now, there's not much space at the moment. Trend line is right here, right? Right there. Unless we were to break through the trend line, then maybe there's more impulse left to continue. Okay. But personally, I think, considering the fact that this is a pretty good trend channel, I would be skeptical of that. I don't think that that's likely. Let's take a look at the dollar yen. Dollar yen is also pushing up at the moment. Had a 50 hook back, and it broke out of the triangle, hooked back, and is now looking to go. Dollar Swissy, 50 fib. Seems that we have space up to the range. Made a three-wave correction, and I'm looking for upside continuation. That's why I was interested in the dollar Swissy this morning. Okay, just because of the fact that we're about halfway to range, we bounced off the weekly support, and now we have maybe a continuation left to the top of the range. Let's take a look at XAU USD. This red line is a big resistance, okay, because of the broken bottoms here, obviously, right? So those are major resistance level if it gets to 1525. Right? In the meantime, there could be space up to that, and then a resistance, right? After that, who knows? We're close to hitting the 618 target right in here. The difference was only $16 there. Let's see if this trend channel holds. It's not a confirmed trend channel as yet, because we don't have 3 hits. Maybe if we adjust it like this, we could have 3 hits. That could be a neat trend channel like that. So if it holds, then we'll keep on going up like that, up to probably that resistance level. Okay, so let's take a look at the 4-hour chart. And one way of measuring if we're continuing or not is maybe a trend line like that. Right? So maybe we'll just stay in this bull flag and eventually break the bull flag for more upside. That would be a good buy, right? Right in there. At the bottom of that trend channel upon the break of the correction. In fact, the correction is looking like a bull flag. And within the uptrend, a bull flag is a good sign for upside continuation. All right. So that's my view on the XAU USD. Hope that helped. Let's take a look at dollar CAD. What's happening there? Dollar CAD didn't break as yet. Didn't break it yet. It's just retraced about halfway, as you can see. Take a look at the 5-minute world. See about halfway. We're just bouncing up and down at the moment. Aussie. Aussie took me in, but it's probably going to make the retrace right now. So that's always the risk when you got a pretty strong 5-minute, movement like that. As I said, that it just breaks by bid and then gives the bigger bounce. That's always the risk. Still, I think that if it hooks back, for example, and bounces off of 618.50. That those should be resistance spots for more downside. All right. So that wraps it up, I guess, for today. Apologies for the sound. Tomorrow, I hope that you'll hear me a lot better because it's pretty good headset I bought, so I think it should be very good quality. I hope. I just have to find out how it works because it only has one plug-in compared to my old headset, and not sure why it's not working. Normally, you just plug it in and it should work, I guess. Maybe it's too sophisticated for me, and I'm just technological, too backward to understand its full potential, or something like that. So hopefully that will work out tomorrow. Yeah, today I would say, personally, I'm interested in dollar Swiss, dollar CAD to the upside, and Aussie to the downside. Although I do think that Aussie is slightly risky in the sense that it has a bit less R2R than the dollar CAD, I think, but I still think it's good enough to take. So I'll be keeping an eye on the odd dollar also after our session to see if we get that retrace eventually, and maybe take an entry directly off the fib or wait for confirmation off the fib. Try to sneak in one more entry that has a bit tighter stop loss, and then wait for the break. Now I wouldn't take another entry off on the break because that would be the same as the one I just took. That wouldn't make much sense. But if we get a good break and maybe wouldn't take the pullback, but maybe the next break could be good as well, because then I can move those two trades, the stop loss to above the new pivot, and my risk would be off the table. So, I would maybe be taking this one here on the pullback, but not on the break anymore, because that would be just adding risk at the same spot, and not on this pullback, the second pullback, because that would be also more or less the same spot. But the break after that would make more sense. So I'm thinking of those 3 points, and not much of the 4 and 5 here, if you get my point. Because I don't want to scale in too many times at the same spot either, right? So that's something you want to be aware of as well. There are a lot of opportunities in different methods to trade it, but you want to make sure that you're not taking too much risk at one spot. Alrighty. Well, I wish you all good trading. And once again, if you want to join a session that has a bit better sound, go to admiralmarkets.com and go to Education, click on Webinars. And tomorrow we'll have live market analysis and trading. You click on Sign Up, or Thursday live internet trading, Sign Up, and characteristics of currency pair, you can sign up as well. And the video archive, you have all kind of past webinars that I hope will be of interest to you. And see you all tomorrow. Cheers, everyone.
The organizer has ended the session.